What's up, traders? John Howell here, officialjohnhowell.com, and in this video, we're going to see a bit of a market update, see what happened last night. Not much, but we'll get to the charts anyway. And then after the chart segment, we're going to have a look at something else. So let's get into it.
Do not place a trade based on what you're seeing in this video today, because trading is risky and it can cause substantial financial loss. There are so many areas you need to become good at to become a good trader. Emotional mastery, chart reading, trading systems, money and trade management. So this video is just educational only to help you become a much better trader.
Alright, so as I said before, we're going to have a look at the chart segment. We're going to have a look and see what's happened in the market last night. Something interesting is happening in the charts right now. I feel something happening. This time, there's something on the internet I talked about, I think this time a couple of decades ago now, we call it Black Monday, where the market really just crashed. Something's happening in the market right now, where the market's really struggling where it is right now. Don't be too surprised if we see a lot more downside to come, okay? So the market there's no random thing about the market. So we'll get that, we'll talk about that in the chart segment, but we'll see what's happening with the actual charts itself, okay? Now, also after the chart segment, I'm going to teach you a simple indicator, a simple thing you can use to help you get more profit out of your trade, out of any trade that you do, and less losses just by using the price action or the chart itself. So anyway guys, without further ado, let's get to the charts.
Alright traders, so let's get straight into a quick market update. On the ES, we can see that the ES had just a little close. We spent most of the day to the downside, then we came up, had a little close to the high side. Once again, this S&P, we're still hitting this a lot of these areas of resistance, very close to these areas of resistance in the S&P. So not much going on through there. If we do have a look at, say, the weekly chart, this is the weekly chart. This is what we do see on the actual weekly chart itself. So we can see they've made this sort of big double bottom, had a rally up, and we've continued to rally up into these areas of resistance. So let's actually have a look at the Dow Jones. On the Dow Jones, we see the same thing, that's still at this very top here, hovering around this whole area of resistance. Not a lot of action happening, despite that the market's trying to push up. And so same with the Russell. The Russell is actually at this area of resistance, still just going sideways. I was hearing the noise, I didn't know what that was. Something just doesn't feel right. The Nasdaq had probably the biggest update, 0.3%, everything, Russell 0.1%, but everything else was down. You can see here the Nasdaq has continued to go up through here. And so that's where we are right now on the Nasdaq. So something seems to be not right here, you know what I mean? Like something doesn't. I feel some sort of a news announcement. Something's going to happen in the market over the next couple of weeks that's going to send this market going crazy. So just looking at these charts, guys, I do see that this market is definitely on the verge of, I believe more downside. But that's just what I believe. But by looking at these charts, guys, and by looking at what we're seeing here. On the S&P, we have this resistance here, and on the Dow, we have this resistance here. If we break above, especially the 1732 level on the Dow, and then obviously at the same time you probably break above the 2042 level on the S&P, then I do believe we're likely then see some free range move to the high side, some nice big move and follow throughs, 2, 3, 4%, possibly even running to the high side. That's what I do see. So we're definitely stuck in this range here. We break below 1980, then we're probably going to hit new lows. We break above 2024, we've got at least this resistance up the top here. It's around 2100 for a short-term target anyway. So that's what I do see, guys, on the overall market itself. Quick look at gold as well too. Gold's having a pullback. That's okay. I've actually got a pretty funky strategy going on with this one here. So the markets run up. Gold's having a nice pullback where it is right now, as you can see. And so I do believe that with gold, we're likely to see a turnaround soon, and we're likely to see some upside. So if we do have a look, let me bring this other settings over here, which is basically the my settings that I use sometimes or most of the time to trade with, you can see what's happening here. So obviously the troughs, major troughs are getting higher. Now made a higher peak. We hit the 200. Now we're having a pullback. So that's what we do see there. On all the indices, we see stochastics are embedded. They're embedded here as well too. All of them are embedded, looking for more upside or trying to get more upside. But you know, guys, something just doesn't seem right with these markets. So anyway, that's what I'm looking at there, guys. That's what I do see, and just remember, guys, that my opinion anyway, that something does not feel right in the markets.
So, traders, you see what's happening with the market right now? Not much. You can see you can see how the market's hitting a lot of resistance levels still. No, I know market had a bit of a pullback during the morning, and then we rallied up high. As I said before, guys, don't be too surprised if we actually see something coming out of the market and something. Wow, look, you know, Europe or China or whatever, you know. And I've got a funny feeling that coming into November, when I think coming in November, there's a lot of big things that are happening in November within the markets, and I think the government's got to start paying back their debt. Will they actually pay their debt back? Well, the answer is probably not. They're probably going to default like every other country will and does. And guess what that's going to do to our market? It's going to send us down moving forward. So that's what I do see moving forward through to November. Anyway, guys. So now you see that. Oh, I did promise you that I'll talk about more profit and less losses, no matter what system you're trading out there. Let's actually talk about this here for a minute. This actually comes about. How do you actually make this actually comes about understanding how the markets work. Now, how do the markets work? How do the markets work? Well, in an uptrend, we have higher peaks and higher troughs, and in a downtrend, we have lower peaks and lower troughs. Makes sense, right? So, let's actually talk about this here for a minute. If we are trading, what we need two different time frames. One for our entries, okay, and the other one's for what we call management. Okay, hear me out here. Okay, so our entries might be the daily. Okay, DAILY daily, and then this one here is their smaller time frame chart. So let's just call this the hourly. Okay, so you could modify this to whatever you're liking within your charts. You could modify this to whatever you're liking with. And man, I need a shave. My beard is fucking itching me. I should shave. So you can see here, the entries is on the dailies. The management is on the hourlies. Okay, so if you're trading a 60-minute chart, you'd use maybe a 10-minute chart. If you're using a 10-minute chart, then you may use, you know, a 2 or 3 minute chart. You know, do you know what I'm saying? If you want to manage your positions properly, okay? Sometimes in the past that I've even done this where I haven't actually used this, and it's actually something where I could have actually used it. So, let's just say, for example, you got in on an entry signal on the daily chart, okay? And I like to use what we call a bullish up day, okay? Where the market opens, rallies up, and closes there, alright? Or the market opens, rallies down, and closes there. Make sense? So that's what we call bullish up. This is a bullish up, and this is a bearish down. You need other days involved, but I won't get too technical on here. But they're the type of days that I like to enter on. Okay, so let's actually talk about this here. If you're entering on here, then the hourly chart. What is the hourly chart probably doing? Remember, this is a daily chart. A day takes 6 hours to form one bar on daily, but then there's 6 bars on hourly chart. What's probably happening on the hourly chart? Well, if we were going down here, down, and then suddenly came up through here, and we're going to look at a bullish example here, in this example. If we actually came up, and we saw this bullish move, what's happening on the hourly chart? Well, probably this happening, right? Lower peak, right? Because remember, it's going down, and suddenly we're starting to get this action. Mate, you with me so far? Cool. So, and this is probably where you're entering. If you use the daily chart to enter here, this is probably where it is right here on this chart right now. Are you with me so far? Cool. So, if you did do that, then what you'd be looking for, you'd be looking at the troughs. And as long as it keeps making higher troughs on the hourly chart, you will stay in. until an X amount of percent profit. So if it gets to, or it gets to a major weekly resistance. With me? So now you're looking at this, so you use the daily chart for entry, you use the hourly chart to manage it based on price action alone because it's making higher troughs, so it just keeps going through there, and as soon as it breaks there, that's when you get out. Now yes, it can just keep doing this afterwards, but again, it's all about managing your positions based on how the markets work. Look at the hourly chart and look at this. So entry daily, hourly management if you can, and obviously and then hourly management until it breaks the trough, or it gets to a major area of weekly resistance where it's actually likely to find resistance up here, and then that's where you say, okay, you know what, it's up here now. I'm happy. Yes, it could continue, but I'm happy with this reward. So this profit I've got. Makes sense? And so, and the benefit of using that, guys, the benefit of using that is that sometimes you can get an earlier exit on the actual hourly chart as well too, because what happens if you get in here and suddenly the market goes down through there and breaks this trough and suddenly starts to do this? Well, this here would be your exit right here. Makes sense? But if you sometimes use the daily chart, sometimes you might get that sort of action happening. Yeah, downward action happening. Makes sense? so you get some downward action happening, and this might be here. So now for me, I like to trade options on the market, no, they're not risky. It's just it's always the driver that's the risky part. And this might be a 20% loss, but I might be able to get out of here for a 10% loss. Makes sense? So that's the differences on how you can actually manage your positions, how you can get more profit and less losses. And I promise you actually start doing that and start utilizing the hourly chart, and especially if you can start using the stochastics, and especially if this part through here, which is this buy signal, is on a support level, and that's your support level there, and we're starting to get this sort of action on the stochastics where we're starting to get divergence. Now we can start to time away in, but that's more like interest and stuff like that. But just management, okay, back on the management, you can see by using the hourly chart, you can time your way in, and by doing that, it's also going to help you stay in for probably a lot longer as well too, instead of looking at the hourly chart. Make sense? Because if the hourly chart does this, so the daily chart goes down, 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 up, up, down, down, down. What do you think happens in these points through here on the hourly chart? Well, it goes from lower peaks and lower troughs to higher peaks, higher troughs. Then it turns, it's going to start lower peak and lower trough. That's what's going to happen on the hourly chart. So the hourly chart can give you an early warning sometimes. Now it's not always going to work, but sometimes it's going to give you an early warning that, hey, the daily chart's likely to turn around. Especially if you can use a key moving average as well. So anyway guys, I'm getting too ahead of myself in this video. As you can tell, I can teach you a lot of stuff about the markets. I'm in the markets every day. I'm in the trenches every single day. I'm trading myself. I'm looking for this sort of stuff, and that's what we see looking at this market. So anyway guys, I'm out of here. I hope you enjoyed this video. Please have a think about this sort of stuff. If anything, just think about smaller time frame than you're trading. Look at the peaks and troughs. A simple moving average. If you want to, you don't even have to have the moving average, and that can help you out. This is John Howell here. Remember, success can be yours if you go climb. So step up, take massive action, and face your fears. Woo! Today.